In today's video, I want to talk a little bit about and explain California Assembly Bill 150 that has specifically to do with the SALT deduction workaround. Now, this piece of legislation and this strategy, the SALT deduction workaround, applies to you if you own a pass-through business entity. That could be a sole proprietorship or a single member LLC, or perhaps an S corporation or an LLC taxed as an S corporation. First, a little bit of background. The reason that this is a thing, the reason that this bill was passed in the first place is as a direct response to the Tax Cut and Jobs Act, otherwise known as the Trump tax cuts of 2017. Thinking back to that time frame, some of the rhetoric coming out of those tax cuts were that it was punitive to blue states. And specifically, what people were talking about was that state and local tax deductions were limited to $10,000 per person. And that's true whether you're an individual or a married person filing jointly. So here's what that meant for California residents. If you're someone who earned $300,000 or had $300,000 of taxable income for a year, let's round it off, easy numbers. Let's say you pay 10% of that to the state of California, or $30,000. Well, state and local taxes that you pay are deductible on your federal return, which means that prior to this Tax Cut and Jobs Act of 2017, that was effective for the first time in 2018, prior to that bill being passed, if you had $30,000 of state and local taxes, you could deduct that on your federal return. And so instead of paying tax on $300,000 of income, now you're only paying tax on $270,000 of income. It was very helpful. Well, the Trump tax cuts changed that. They limited the state and local tax deduction, or SALT deduction is the acronym, to the first $10,000. Anything beyond that just kind of evaporated. You didn't get to use it. Well, the states, blue states that is, who typically impose an income tax, were not terribly happy about this. And California and many others, I think the count is in the 20s at this point, have passed workarounds to that for owners of pass-through businesses. It's called the pass-through entity tax that you can pay throughout the year. Basically, what it means is that you can prepay your state taxes owed through your business, and then as the owner of that business, get a credit at the end of the year when you file. So here's what it means. Let's use the same example. You make $300,000 a year in profits from your LLC that are subject to state and local taxation. You pay $30,000 of that to the state of California, but you're only allowed to use the first $10,000 in terms of a deduction on your federal return. The other $20,000 goes away. So if you're missing a $20,000 deduction and you're in the 24% tax bracket, by my math, that's about $4,800 of extra federal taxation that you have to pay. Well, the way that this workaround works in practice is that your business can prepay the state of California for the taxes that you as the individual owner expect to own. So you cut a check from your business to the state of California for $30,000. Then at the end of the year when you file, you get that money back in terms of a credit. That $30,000 goes toward your state tax bill for the year. And effectively, what you've done is created a legitimate business expense and reduced your income of $300,000 down to $270,000. So now on your federal return, you only have to pay tax on $270,000 because that $30,000 of prepaid tax you sent to the state is a legitimate business deduction in the eyes of the state of California, and thereby reduces your income. So this is a really handy way that owners of pass-through businesses can reduce their taxable income. It just requires a little bit of forethought and planning. You can't decide to do this in December. You have to make estimated payments toward that balance throughout the year in order to be eligible, and I believe file some kind of election form, which hopefully your accountant can handle for you. So that's the background of California Assembly Bill 150, or AB 150, and the SALT deduction workaround. We've seen a lot of California businesses really ring the bell on this and save tens of thousands of dollars in federal taxation by being able to do this. So it takes a little bit of planning. Reach out to your tax professional for further information.